Hello traders, Gary Wagner with the Gold Forecast here. It's 10:45 a.m. Friday, Aloha Friday to you from Honolulu, Hawaii. The 7th day of January. This is the daily report. Gold currently trading down about $1.70. Predominant buying plus 50. Strength of the U.S. dollar minus 220, but that's not the story. The real story is the lows that it made this morning, the way the market came down, and when we take a look at the weekend traders. This is a 60-minute chart, and as you can see, if I start here from the 31st, this is that top we hit right on that third. This is that 1424, and as you can see, this has been one tough week, pretty much straight down to these lows where it broke below 1355. On today's report, we're going to be looking at Fibonacci retracement levels to get some kind of an indication if this market continues selling, where it might go to. One. Secondly, a very, very interesting candlestick, a long-legged doji, one of the most significant, what we call turning points in the market. We'll talk about that all on today's daily report, the weekend review. Traders, we are looking at a daily candlestick chart. I've put up some Fibonacci numbers for us, some retracement levels, so we can take a look at a possible fall. Right now, of course, it's right in the middle. It did touch below this low, and let me explain where this Fibonacci is coming from. It is coming from this one dip right in here all the way to our record top. Now, when I do that, of course, we get our different levels. Our 23 went through that like a hot knife through butter. And then this 38% level, this is that level. I told you right around the 62 level, 56. That's a pretty critical level. It broke through that very, very hard the other day. Now, this candlestick right here, like this candlestick 2 days ago, is that doji. And what happens with a doji is a candlestick in which the open and close are the same or very, very close. And it is a consolidating candle. In other words, what it indicates is that when the market trades, and it has this huge range that you see here, neither the bulls nor the bears are able to have absolute control. If the bears were able to have absolute control, this would be a long black candle. If the bulls were able to retain control, this would have moved up to be a long red candle. Neither of those took place. And with roughly one and a half hours left in trading, I would imagine that the market is going to close right in this area. I will tell you this, traders, I am ecstatic at this point that we got out at 1405, that we have been sitting flat in the market. Where will this sell-off end? Well, obviously, it broke through some critical areas. I can tell you this. When the market bottoms, we will get indications through our candlesticks as they match up with Fibonacci. Those are the two things that I have used fairly successfully to do that. Is it time to look to buy? Absolutely not. We have absolutely no indication right now that this market's bottomed. Just as I talked about the other day, it is setting itself up for that three-river Morningstar variation, but it absolutely has not completed that pattern whatsoever. If we get some kind of a rally and we see the market come up like this, once again, that would be an indication that we've possibly hit the bottom. Now, with the market selling off the way it did, conservative traders might even wait for what's called a confirming candle. That would be a second candle here. I will give you an exact signal as to when to enter the market and where to place the stop when the time is right. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you on Sunday for the daily report. Bye-bye.